right, thank you, Rick. We're going to continue with our next speaker now, Peter Benke. He is the Director of Corporate Development for Gold Royalty. Peter brings nearly a decade of financial expertise to Gold Royalty, having been a key member of the team since its founding in 2020. In his role, he has been instrumental in driving successful mergers and acquisitions, as well as leading the company's investor relations efforts. Prior to joining Gold Royalty, Peter was a senior M&A consultant at KPMG, specializing in transaction services and financial due diligence for clients in the metals and mining sector. So please welcome to the stage, Peter Benke.
Thank you very much, Daniela. Thank you, Rick. Thank you, everyone, for being here today. And also, a big thank you to the organizers here. Always a productive conference here in Boca and a lot of work behind the scenes. As Daniela mentioned, my name is Peter Benke, Director of Corporate Development, one of the founding employees of the company in 2020, along with Amir Adnani and David Garofalo, our co-founders. Before getting into Gold Royalty specifically, briefly review our disclaimer, also available on our website. And I want to touch briefly on where we find ourselves today with regards to the market for gold. Rick spoke to zooming out, looking at longer term trends, and if you zoom out looking at gold over the past 50 years, it's been a one-way trade. From $38 an ounce in the early 1970s to this year over $2,400 an ounce, the returns have been strong, but in our view, there is a lot of room to run when we look at the real all-time price for gold, which is shown on this chart. In the early 1980s, gold approached $2,800 an ounce on an inflation-adjusted basis. And we would argue today, with inflation continuing to persist in 2024 and global debt levels making it impossible for central banks to combat this by increasing nominal rates, we will see real interest rates continue to decline and increase the nominal price for gold. We see a lot of room to run in the commodity. Despite this, and what this chart also shows, is that gold equities, whether that's producers, developers, explorers, or even royalty and streaming companies, have not provided the leverage to the gold price that investors are looking for. Now, we can rationalize this from a producers, explorers, and developers standpoint. Inflation impacts margins, increases operating costs, increases capital costs. But from a royalty and streaming company, we're insulated from those cost exposures. So we see this pullback in many of the royalties and streaming companies as not tied to fundamental value and represents a significant opportunity. Since you'll be hearing much smarter people than me talk about the gold market at length, get into the details of Gold Royalty at this point. And first and foremost, we view royalty and streaming as the best way to gain exposure to the underlying commodity. We have a diversified portfolio of over 240 assets at Gold Royalty. This significantly decreases your risk relative to a single asset producer, development, or exploration company. As a royalty company, we take top line exposure, a percentage of revenue from this portfolio of 240 assets. This not only insulates investors from operating and capital costs at the various assets, but it also gives you free exploration and expansion upside. When operators put money into those assets, we benefit from that without having to spend another dollar. And the last key metric of a royalty and streaming company that is particularly attractive is the low overheads associated with the business model. We have 8 full-time employees at Gold Royalty Corp. We have a fixed cost structure, so as our revenue profile continues to grow, you can expect each incremental dollar going to the bottom line in terms of cash flow. Now at Gold Royalty, we're a relatively young company, having been founded in 2020 and gone public in 2021. But in that short time frame, we've been able to assemble one of the highest quality portfolios with the strongest revenue growth profile in the entire royalty and streaming sector. Our portfolio is underpinned by 3 of the 5 largest gold mines in Canada and the USA, generational assets with exceptionally strong operating partners and multiple decades of revenue ahead of it. The way we've been able to build this portfolio in such a short period of time is really a testament to the experience of our management team and board. While we are a small team, many of the board have run some of the largest gold companies in the world or worked for some of the largest financiers in the sector. This doesn't just give us experience and an understanding of what we're investing in, but more importantly, it gives us the connectivity across the industry to find new investment opportunities and transact on a bilateral basis to create outsized returns. Now, briefly going over our track record, how we've gone from 18 royalties at our IPO being spun out of Gold Mining Inc. with a portfolio of high-quality assets, but relatively longer dated, no line of sight to near-term revenue, to where we sit today, as I mentioned, with the strongest revenue growth profile in the sector. In 2021, coming out of our IPO with a strong valuation, we saw a fragmented small cap end of the royalty and streaming sector and sought to start consolidation within the space. To that end, we acquired Ely Gold Royalties and Golden Valley and Abitibi Royalties later that year, growing our portfolio from 18 to nearly 200 royalties in just 12 months. We've seen significant consolidation within the sector since then, with several other companies being acquired, but we still see scope for continued M&A going forward. In 2022, with our currency derating as interest rates started to increase, we looked for other avenues to continue to grow the portfolio, whether that be third-party acquisitions, as we did with Cote and the Nevada Gold Mines portfolio, with that transaction bringing on Barrick as now our second largest shareholder, and also royalty financing transactions such as our recent Borborema investment at the end of 2023. Through these more targeted and surgical acquisitions, we've been able to really enhance our near-term cash flow profile to where we sit today with over $500 million in consensus NAV, close to a 60% compound annual growth rate, over 240 assets, and as mentioned, flagship generational assets such as Odyssey, Ren, and Cote, those 3 of the 5 largest gold mines in North America. Our fourth leg of growth beyond corporate M&A, third-party acquisitions, and royalty financing is our royalty generator model. When we acquired Ely Gold Royalties, we didn't just acquire great assets, we acquired great people, specifically Jerry Bauman, one of the co-founders of Ely. Jerry's based in Reno. We have an office there, and what he does is he goes and stakes claims around existing properties at very little cost, and then we'll vend those claims to operating partners, where we will retain a royalty on the back end. It's a low-cost way for us to continue to grow the exploration pipeline in our portfolio. Through this aggressive growth strategy, we've been able to assemble the pipeline of assets you see on this slide. 7 cash-flowing assets currently, another 14 at various stages of development. And what you'll notice with the flag icons on there is we're very concentrated in Canada and the USA, specifically Quebec, Ontario, and Nevada, representing over 80% of our underlying business value. Very established mining jurisdictions, great geological potential, and importantly with a royalty and streaming company, as all we own are pieces of paper, contracts between us and our counterparties, the operators. It's important we understand the rule of law with where we're investing. The other key point I'd highlight on this slide is the quality of operating partner we've established ourselves with. It's the likes of Newmont, Barrick, Agnico Eagle, the largest gold mining companies in the world, are driving forward the key development stage assets in our portfolio. It doesn't just give us the confidence in their expertise and the ability to build these mines, but in challenging equity markets, these are exceptionally capitalized companies, and they have the balance sheets to fund the development that is driving our future growth. Speaking to that future growth, 2024 is a tipping point for Gold Royalty. We're breaking into strong positive free cash flow just 3 years after our IPO, and it's seen an over 160% increase in top line relative to 2023. This is really that at the precipice of maturing into a positive free cash flowing business in 2024 as these key development stage assets enter production and ramp up production through this year. Looking ahead and highlighting a few of our recent acquisitions, we see continued growth out towards the end of the decade. The revenue chart here is based on the 6 analysts that cover Gold Royalty consensus estimates and the contribution of the 3 acquisitions we've made over the last 12 months. Just last month, we closed the acquisition of the Varus copper stream, an exceptional high-quality silver zinc project in Bosnia, and that is immediately accretive to our revenue and cash flow per share on a 20-plus year mine life asset. Again, speaking to that generational high-quality project that we like to invest in. Borborema and Cozamin, similarly, first quartile cost assets within their respective commodities. As this revenue growth trajectory crystallizes over the next several years, you can expect to see it translate directly to the bottom line given our fixed cost structure as a royalty and streaming company. We do not expect to see any increase in costs as this revenue growth crystallizes over the next several years. I would also note that based on consensus estimates, this is on a gold price of only $1,900 an ounce, so we could see significant upside as the commodity continues to appreciate. Beyond the cash flowing and development stage assets, it's easy to lose sight of the 200 plus exploration assets that we have within our portfolio. But a metric that we like to point to as a proxy for the potential and the upside that's inherent in the optionality on those assets is how much money our operating partners are putting into the portfolio. And over the past 4 years, we've seen over 2 million meters drilled across all of the assets within our portfolio, over 500,000 meters a year on average. That's the equivalent of over $200 million being invested into the ground that we as a royalty company don't have to spend a cent for. We get all of the upside from that, all the resource conversion, all of the potential expansion and underlying reserves for free. In fact, we just published our updated asset handbook. It's available at our booth. And you can see in there a resources and reserves table of all of the assets in our portfolio. And collectively, we have over 120 million ounces gold equivalent within our portfolio currently. So looking ahead, and with 240 assets, I can wax poetic on many of them, but what are the key drivers really moving that growth over the next several years? First, our flagship asset, the Odyssey Mine, going to be Canada's largest underground gold mine, located in Malartic, Quebec, operated by Agnico Eagle. Currently, the second largest open pit mine in Canada and transitioning to the underground mine in 2028. Our 3% NSR covers a meaningful portion of that underground portion. We are getting some modest near-term revenue, but it's increasing over the next several years and really kicks in towards 2028 to 2030, when it'll be one of our largest revenue contributors. Similarly, Côté achieved first production earlier this year in Q1 and expected to achieve commercial production in Q3 this quarter, and that will be Canada's third largest gold mine once fully ramped up. Our 0.75% NSR at Côté covers the southern portion of the pit, that is phase 1 of the pit, so we expect to have immediate revenue contributions from Côté this year. Last Canadian asset I'll highlight is our royalty over the Borden mine, part of Newmont's Porcupine complex. A smaller royalty for us, but Newmont continues to mine more and more under the lake where our royalty is located, so we expect increased coverage at Borden moving forward as well. Speaking to some of our recent acquisitions, Borborema, I mentioned this is an asset that we closed on late last year. This is around 80,000 ounce a year open pit gold mine in Brazil, operated by Aura Minerals, a diversified, experienced Latin American producer. We've structured this investment with pre-production payments and a gold-linked loan, so we're receiving immediate cash flow, but this asset's set to enter production in Q1 of next year, where we'll see another step change in our revenue profile from Borborema. Varus, our most recent acquisition, as mentioned, closed last month. Exceptionally high quality asset, and we have a 100% copper stream over the entire polymetallic project. It's one of the lowest cost silver mines globally, and will have a 20+ year reserve life. This is a major contributor to our near-term revenue profile, and also brings in a portion of copper into our portfolio as well. While we remain a predominantly gold company, that copper exposure is something we're quite bullish on as well. To finish off, focusing on the USA, a couple of our assets within Nevada. Smaller project, County Line, is expected to be the future for Fortitude Gold, as their Isabella Pearl mine slows down. And then lastly, Ren, the northern extension of the Gold Strike mine, the largest gold mining complex in the USA. This is a high-grade underground project that Barrick is tracking towards a pre-feasibility study in 2026. And based on our recent site visits and discussions with management, we're quite confident that this will be an asset that supplements our production profile in the midterm over the next several years. And a separate fact I like to highlight with regards to Ren is part of the Gold Strike complex is Franco-Nevada, the largest company within our royalty and streaming sector, was founded on the back of a single asset, and that was a royalty on the Gold Strike mine. And we also have a piece of Gold Strike through Ren. Reiterating our jurisdictional and our commodity exposure, as I mentioned, over 80% in Canada and the USA, primarily Quebec, Ontario, and Nevada, and we still remain a primarily gold-focused investment with over 90% of our book value associated with gold assets and a smaller portion of copper. Now, zooming out and looking at the sector as a whole, and speaking to really the primary vision of the company when we were founded, is that there's a clear correlation in royalty and streaming between scale and the valuation multiple that these companies benefit from. Franco-Nevada, Wheaton Precious Metals, Royal Gold, all exceptional companies, great assets, great cash flow profiles, but very fulsomely valued within the market, 2, sometimes even closer to 3 times net asset value. The rest of the sector, in our view, is effectively small cap. If you look at Triple Flag, Osisko, Sandstorm, sometimes referred to as mid-tiers within the space, in our view, all of us are still too small to be investable in the eyes of generalist institutional investors. And the need for consolidation and achieving scale within the small cap space will be what drives value and how we can achieve that multiple relative to the majors within the sector. We also believe that by capturing that mid-tier, being able to attract generalist capital, but still being small enough to grow, we'll be able to achieve a premium multiple to that of even the seniors. The fact of the matter is, Franco-Nevada at 30 billion market cap would have to invest a very significant amount of capital to continue to grow and sustain its current level. There aren't that many projects out there that have that type of scale or that type of investment universe for them to continue to grow. So it is a challenge for the larger end of the spectrum. Where we sit today at Gold Royalty, it's a very attractive relative valuation compared to our peers. And as we see that cash flow growth with assets like Côté coming online to commercial production in Q3, Varus entering commercial production in Q4, and Borborema entering production in Q1 of 2025, we believe those catalysts driving forward our cash flow growth and delivering on that revenue that we've guided to the market will really help us re-rate back in line with peers. Given the portfolio we've been able to assemble, the track record of accretive acquisitions we've been able to attract some of the premier names within the industry to our shareholder register. Our strategic shareholders remain Gold Mining Inc., our former parent company, and Barrick through Nevada Gold Mines with the portfolio we acquired from them, the second largest gold mining company in the world. They represent about 20% of our shareholder base and our long-term strategic shareholders. Beyond that, sector specialists, some of the most renowned names within the royalty or the global mining sector. Queens Road Capital out of Hong Kong, managed by Warren Gilman, an industry vet with over 40 years of experience. Taurus, they've started a private royalty fund which has invested directly in Gold Royalty, and we also have a strategic partnership with Taurus to source new opportunities. They're a well-renowned global resource investor as well. And separately, Ryan Mine Finance out of New York and Commodity Capital are long-term strategic shareholders that see the long-term vision and the scale we're trying to achieve at Gold Royalty Corp. To wrap things up and to briefly touch on our capital structure, 169 million shares outstanding currently, just under 200 million fully diluted. Market cap today sits around $250 million with very strong trading liquidity relative to peers, which for you as investors is increasingly important in today's capital markets. We trade close to $2 million a day, which is among the strongest, and especially in the small cap royalty and streaming companies, which allows you to manage your positions, not only make investments, but take profits when the time is right. Looking at our balance sheet, we have just over 10 million in available liquidity through our cash on hand and our existing credit facility. So to summarize, royalty and streaming, of course a biased view, but is the best way to invest in the commodity. Top line exposure, a diversified asset base, very low cost profile, and free exploration and expansion upside. At Gold Royalty, we've assembled one of the highest quality portfolios, top tier assets, and have a multi-decade long duration portfolio of assets. And we continue to evaluate ways to grow the portfolio on an accretive cash flow and net asset value per share basis, looking for opportunities that'll enhance the existing portfolio, but in a disciplined manner. So with that, really appreciate everyone's time today, appreciate the organizers here, and look forward to speaking to everyone later at our booth. We're at booth 3 and hope to see many of you there. Cheers.